Hello, and thank you for attending today's presentation. Throughout the session, I'm going to talk to you about a new pension being introduced by your employer, which provides you with the benefits under the new Pension Freedom Scheme legislation. To start with, here's a quick reminder of who we are at Mac Group. I'm going to draw your attention to the personal finance portal at the bottom. Because of COVID-19 and being forced to work remotely, we've accelerated part of what we're doing at Mac to support clients. In terms of contacting us and also accessing the details of your pension, investments and important documents, we have launched our personal finance portal. The portal is accessed through bank level security and you should have already received an invitation from us to register. If you haven't yet, you should soon, so please look out for it. This is the most secure way for us to connect and share information with you remotely. Like your existing pension, this is a personal pension with Aviva, and we, Mac, are here to guide you through the process of transitioning to the new pension scheme and make sure you have all the details you need. Aviva will give you the tools to work with, and Mac, we will show you how to use them, as well as continue to give you advice around your contributions, investments, and any other pensions you may have, and of course, focus on your retirement planning. As part of our role, we have carried out due diligence and compared a number of pension providers on the Isle of Man, and have selected Aviva as the best option in the current market. This can be demonstrated on this slide. Aviva are a strong, reputable organisation with an AA- stable rating and a solvency ratio of 194%. This means that if Aviva paid each client their money back, they would have surplus capital of £11.8 billion. But if the worst were ever to happen, up to 100% of the value of your assets are protected by the Investors' Protection under the Financial Services Compensation Scheme. They have invested heavily into the new platform and they will hold your pension on this. As we go through the presentation, I'll be talking about the current platform, the future platform, and hopefully that will come through. But any questions, please don't hesitate to ask us. So, what is the Pension Freedom Scheme? The PFS is the largest change to pension legislation for over 30 years, and you'll now receive greater flexibility and more options for drawing your pension benefits than ever before. Although the legislation was introduced in April 2018, it did not receive royal assent until late 2019. We refer to it as the PFS, which is also known as the 61H. The changes will affect the way you take your benefits when it comes to retirement. The changes are more about the at-retirement phase rather than your current phase. The idea of these rules is to give individuals more flexibility in how you take your pension. Probably the best way to explain the differences and the benefits is with a quick recap of how your current pension works. In your current pension, we'll refer to this as your 89, there is an annual allowance of £50,000. You can start taking your benefits from the age of 50. There is a 30% tax-free cash allowance and the residual pot remains with Aviva. Aviva, unlike any other insurer, will provide the option of an annuity. Or, alternatively, you may transfer your pension into a SIPP to gain greater flexibility with your income via capped drawdown. Just to explain in greater depth what these options are, an annuity is where you exchange the value of your pension fund with the provider with a guaranteed fixed income for the remainder of your life. It's worth noting that once an annuity is in place, it is completely inflexible, it cannot be changed or cancelled, and in the event of death, benefits would continue going to a spouse or dependent child under the age of 18 or under 23 and still in full-time education. But there would be no residual cash benefits. Capped drawdown is essentially the withdrawal of funds from your pension on a monthly, quarterly, or annual basis. The income is not guaranteed as your funds are still being invested, and the value of your investments can go down as well as up. At retirement and in retirement reviews would help us to manage the value of your remaining pension. In the event of death before accessing your pension, funds will be passed to your estate tax-free. However, if you have drawn your benefits via a SIPP, your fund will pass to your estate with a 7.5% tax charge. This does not apply on the annuity, as this will provide a spouse's dependent's income as opposed to a lump sum. When we compare this to the new PFS, we can see the annual allowance is still at £50,000, but the tax-free cash element is now higher. You can now take up to 40% of the new fund as a tax-free payment. The minimum access age is now 55, and we see this as the only downside to the new legislation. If you still wanted to draw your benefits at 50, you could always transfer your accumulated funds back into the 89 pension. However, you would lose access to the more flexible benefits and have the reduced tax-free cash allowance. In terms of how you take your income, the new PFS is flexible, and you are totally in control of how you take your pension. There is no longer any tax on death, which means that your nominated beneficiary will receive 100% of the value of your pension, whether you are already in receipt of some of your benefits or if you haven't got to that point yet. It would be nice if you could make the most of these benefits and transfer your existing 89 pension into the PFS. However, the government have put in place a 10% tax on transfers into the PFS from 89 plans. And whilst we would look at every circumstance and advise accordingly, to date we have not advised anyone to do this. One further improvement on the new scheme is that Aviva have increased the number of funds available to you to just north of 230 currently. They've introduced a number of external fund managers, including some ethical, sustainable and property funds, so there is a wider range of funds available for you. The proposal is for the arrangement of all new regular contributions to go to this new pension scheme. For us as practitioners, we cannot see any detriment to accumulating benefits under the new regime. It is a much more tax efficient and flexible environment, and if you did want to start taking your benefits earlier than the PFS allows you to, there's nothing stopping you tipping your benefits back into the 89 plan and taking them from the age of 50. We look to keep this transition to the new PFS as simple as possible, taking out the requirement for new application forms for each individual member. Your employer has done this on a compulsory basis. That means for all of you, you will be joining the new pension scheme, and that's because it is in your best interest. The new pension scheme will go live from January. That is the date that your contributions will start going into the new pension freedom scheme. As you see here on the left-hand side, your regular contributions and accumulated funds are sat in the existing 89 rules on the current platform. In the first phase of the transition to the new platform, your regular contributions will automatically be redirected into the PFS. It is Aviva's intention to close the current platform where your funds are held. So for the next part of the process, Aviva have created a mirror scheme for you on the new platform under identical terms as your existing plan. Funds will be transferred into your new plan at a predetermined date once your first contribution has been paid into the pension freedom scheme. The date of this transfer will be communicated to you once it has been set by Aviva. Please do not switch your funds in your 89 plan once you've been notified, as this change will not be carried through into your new plan. It is important to note that for this transfer of funds, there is no 10% government tax on your pension fund. That only applies to the funds being transferred from the 89 pension fund to a PFS. This second policy will not receive any regular contributions but will continue to be invested as before. For anybody currently in lifestyling, this process will continue from the stage you're currently in, unless you are within the last 10 years before retirement. In this case, there will be a small alteration for you, and a member of Mac Financial will be in touch with you. Lifestyling is the process of moving funds incrementally into investments that carry less risk as you approach retirement. One small thing to note, as there will be a movement of funds, there will be a rounding of percentage allocations during the transfer and a rebalancing to the original 70-30 split you have between your funds if you're in lifestyling. There will be no time out of the market, however, and this part of the process will be affected if you have waiver of premiums or with profits policies. Again, a MAC advisor will be in touch with you regarding this. The default fund or strategy that has been selected for your scheme going forward is referred to as the My Future Focus. Your funds start accumulating in the My Future Focus Growth Fund until you enter the last 10 years before retirement, when you automatically start to move into the My Future Focus Consolidation Fund, which carries less risk. This glide path illustrates how this works. So every year, 10% of your accumulated pension gets transferred into the lower risk investment on a month-by-month basis. It is important your risk reduces the closer you get to retirement, as you'll wish to experience less volatility during this period of time. We'll discuss risk and volatility in more depth shortly. If this is something you do not want, we encourage you to go online and change your funds or speak to your advisor. The My Future Focus Growth Fund is a risk level 4 out of 7 investment. This is a multi-asset fund investing across equity, property, fixed interest, and money on deposit. It provides a high level of diversification while focusing on growth. This fund has been selected as the default fund due to its size, past performance, risk profile, and is the main fund used by Aviva for auto-enrolment in the UK. As we look to reduce the volatility, we move funds towards the My Future Focus Consolidation Fund. Like the Growth Fund, this is again a multi-asset fund, but with less exposure to equity than the Growth Fund and more in fixed interest and money on deposit. This reduces the risk to a 2 out of 7. This fund still provides great diversification, but focuses more on minimising volatility as opposed to growth. Again, this fund has been selected as the default fund due to its size, past performance, risk profile, and is the main fund used by Aviva for auto-enrolment in the UK. Aviva rate all of the funds available to you on a scale of 1 through 7. The higher the level of volatility, the more that you can expect the value of your investment to fluctuate each year. Your attitude to risk is personal to you and reflects the level of risk you are prepared to take with your money in order to seek out returns. So what does volatility mean? Volatility is the upwards and downwards movements of a fund. Volatility can be beneficial during the accumulation phase as you buy into the fund at varying rates, and you'll see the downturn on the green fund presents a good opportunity to purchase funds at a reduced price and take full advantage of the market conditions as the fund values rise. Whilst this goes hand in hand with a long-term investor, we wouldn't advocate anyone investing into higher risk funds as they approach retirement, unless of course there is any real justification for it. The idea of the My Future Focus strategy is to de-risk and remove that volatility from the pension fund as you approach retirement. MAC advise using the following funds for each risk profile. They match the Aviva attitude to risk with regards to a 1 through 7 risk rating. Whilst we have chosen default funds for 1 through 5, for risk rating 6 and 7, ordinarily funds with a higher risk move away from diversification and become more specific and specialised in nature, making it more difficult to choose a suitable fund that would work for the majority. Of course, if anyone felt that they wanted to move into a higher risk, we'd be more than happy to have an individual conversation with you and give you some ideas of what your fund selection should look like. The important point, however, is that if you weren't happy or sure of the default fund, My Future Focus Growth, we'd like to sit down with you to identify the risk rating that would be suitable for you and the associated default fund. As mentioned earlier, as part of the PFS, you now have access to a much greater range of funds, approximately 230. Aviva have introduced a number of external fund managers, as well as introducing property funds which have never been available to Isle of Man pension investors before, unless part of a multi-asset fund. There is an additional range of active and passive funds where the manager makes changes to the fund on a regular basis, or will just monitor and follow a model. Ethical funds, such as those included in the Lion Trust range. Currently, there are 1 or 2. This has been increased to 12 or 13. So in summary, a much wider range of fund choices. Some funds, however, carry extra charges, but there are approximately 30 that do not carry any additional charges, and these are the ones MAC have used to select your default fund. If you decide the chosen default fund is not for you and you want to alter to one of MAC's identified default funds or something from your own selection, that can all be done online through the MyAviva Online or through the MyAviva app. The only functionality from the following video you don't have is to be able to transfer pensions or deposit single lump sums, but we are still here to help with this. I'd hope that most of you are registered for the Aviva online portal, but for those of you who are not, here is a short but very informative video from Aviva, which will take you through the technology available to you.
MyAviva is all about making life easier for employees. It's beautifully simple. Let's say you're a scheme member who's just activated MyAviva. What can you do? A quick, easy login to your account with fingerprint or facial ID on our new app, and you're in the perfect place to take control of your pension. Right away, you can see an up-to-date valuation of your pension, as easy as checking your bank account online. And just one click more is all it takes to view your policies. You can also monitor your pension's performance, and if you want to, you can switch the funds it's invested in. A few more clicks and the job's done. No maybes, and no waiting around for letters to arrive. You can even make one-off payments into your pension account. We'll be sure to let you know that you could get back less than has been paid in before you proceed. And if you have other pension pots worth under £30,000 with another provider, and you want to move them into your Aviva pension, you can do this on MyAviva. We know that transfers aren't right for everyone, so we'll tell you what you need to consider first and provide information about the potential benefits and risks. MyAviva makes it easier to think about the future too. You can access tools to get an idea of what your pension might be worth years from now, so you can see if you're on track. Need to do a bit of personal admin? A couple of clicks and you're ready to update details like your email address or let us know you're moving home. You can also add the name of your chosen beneficiary. No pen and ink and no fuss. MyAviva also lets you access other Aviva policies you may have, such as car or home insurance, all together in one place. No need to start searching through drawers. So that's it. MyAviva is paperless, effortless, and completely secure. It's the easy way for your scheme members to stay in control of their pensions.
You can still arrange for a fund switch directly with us, and we will share a fund switch form with you through your personal finance portal. We will do this at the same time as reminding you about your new scheme going live and that you may want to check your funds. It may take a little longer this way than by using the Aviva app or online, which is a one-day turnaround. The key message, however, is that if you're in any doubt, get in touch with us. After this date, you will receive your policy documents for your PFS and later on your 89. It's a phased process from Aviva as they start with the redirection of your contributions, and at this point you'll receive your PFS policy documents, to be followed by the creation of your new 89 on the new platform, and at this point you receive the documents for the new 89 plan. The documents will go directly to your home address, not to your place of work. It is important to note that although there is no time out of the market when your 89 funds transfer to the new 89, there will be about a week when you may not be able to access your policy on the MyAviva app. This is really important that you check your policy documents. This is a good opportunity to make sure that all your personal details are correct, and we would encourage you to double check the underlying funds, as we would encourage for all new pensions, to ensure that you understand your choices and that they correspond with what I've talked about today. If anything isn't right, the sooner you can make us aware of this, the better. MAC have transferred their own pension scheme in this fashion, and we're pleased to report that it was a seamless move for all staff and we did not encounter any problems. There shouldn't be anything you need to do right now, except to make sure you have spoken to us if you have with profits or waiver of premium policies. One of the advisors should already have been in contact with you, and if not, they'll be in contact with you soon. I would also recommend you go online and make changes to your fund choices if that is something you would like to do. So this brings us to the end of today's presentation, but just to summarise, there will be an automatic redirection of your regular contributions into a new pension scheme called the PFS, and later a transfer of your accumulated funds from your existing 89 to a mirror 89 policy on the new platform. If you don't want this to happen or are in any doubt or have any questions, please get in touch. But obviously, I can assure you, this is a change for the better and there is no detriment to you in terms of your cost. We look forward to seeing anyone who would still like an individual meeting, and please feel free to contact us through the PFP or by emailing your advisor at mail@macgroup.im. Thank you.